Hello everyone, I am Pratap here. We are at lesson 7. In this lesson, let us focus on zone freshness and zone achievement. These two topics are having dependency on earlier lessons. In case you are attending this video first time, I request you go to NeoStock YouTube channel. There you click on the button home and then scroll down to a playlist supply demand zone price action course. All the earlier lessons are available under this playlist. Even the upcoming lessons will also be available under this playlist. I request you complete these lessons and then get into lesson 7. So let's continue with our topic. Let's start with zone freshness. A zone freshness can be defined in one of these four types. The first one is fresh. Second one is tested. Third one is pierced. And the fourth one is violated. These are the four types we can define for zone freshness. Let us look into each of these types in detail with examples. Let's start with fresh zone. What is a fresh zone? Any newly created zone is called a fresh zone. So in this example, a new demand zone is created. The moment a zone is created, its freshness is called fresh. That means it is a fresh demand zone, or if it is a supply zone, it could be a fresh supply zone. What exactly a freshness indicates? If a zone is fresh, it indicates it is a tradable zone. The zone is eligible for trading purpose. So next time when prices reach into this zone, we can trade in that particular fresh zone. That means the fresh zones are tradable. This is the important point you should remember. So in this example, the zone freshness equal to fresh. Now prices are moving up and down. And finally, the price reached into this demand zone. Please look here. The price entered inside this demand zone. What a demand zone is having? Institutional pending buy orders. Institutional pending buy orders. And this is the area where we need to buy. So our orders and institutional pending orders, they get together executed and then push the prices up. That is what we learned in our previous lessons. So that's why we said a fresh zone is a tradable zone. Because the zone is fresh, when prices are about to enter into this demand zone, we can place our buy order. If it is a fresh supply zone, you can place your sell order. That is your short trade. The moment prices entered into this demand zone, the zone freshness will be changed. Now the zone freshness is tested. Now a fresh zone is changed to tested zone. What a tested zone indicates? A tested zone indicates it consumed some of the institutional pending orders, or it might have consumed majority of the institutional pending orders. We don't know how many orders it is consumed, but we know some of the institutional pending orders are consumed. What will happen if some of these institutional pending orders are consumed? Next time, again prices go up and again they may come back after some time. Second time when prices are entering into this demand zone, maybe this demand zone, I'm using the word maybe the demand zone may not be having enough institutional pending orders to push the price up. Why? Already during the first test, when the zone is tested first time, during that time, it is already consumed some of the institutional pending orders. And during that time, the demand zone pushed the price up. Next time again prices are entering into this zone, it may not be having enough power to push the price up. You may ask a question, is it true always? It may not be true always, but most of the times it might be true. So that is the reason why a tested zones are not tradable zones. The tested zones are not tradable zones. But tested zones are valid zones. They are valid, but they are not good enough for trading purpose once it is already tested. This is the important point you should remember. But there is an exception. There are some special zones called high liquidity zones. And you will be learning about high liquidity zones in the third phase of our training program, that is advanced strategy sessions. So during that time you will understand even tested zones also works for multiple times, even third time, fourth time, fifth time, or even sixth time. The time being, until you learn these advanced strategies, remember this point. Once a zone is tested, it is not recommended for trading. Only fresh zones are recommended for trading. This is the important point you should remember. Okay, now the zone is tested, and now again prices are moving up and then down, and finally the price went below this demand zone. What exactly the meaning? In this candle is having a lot of supply. That supply means sell orders. And all these sell orders consumed remaining pending orders in this demand zone. During the first test, some of the institutional pending orders are consumed. Now, second time when prices reached into this, the remaining institutional pending buy orders are not having enough strength to push the price up. Because they are not having the enough strength, the existing supply consumed all these remaining institutional pending buy orders. And finally, the prices went beyond this demand zone. But finally, at the time of closing, what happened? The prices again moved up and closed inside this demand zone. The prices are not closed below the demand zone. Why prices are moved? There could be some other reasons that you will understand during your advanced strategy session during the third phase of your training program. For time being, let us focus what's really happened at the end of the candle. At the end, the price closed inside the demand zone. In such kind of situation, the zone freshness is changed to pierced. Such kind of zones are called pierced zones. Pierced zones are invalid zones, which are not used for trading purpose. Strictly speaking, we can remove this zone from your chart. But still, why we are keeping? Because I already told you, during the advanced strategies, these pierced zones will help you to find something else. You will be learning some concepts like bull traps, bear traps, such kind of traps you can identify with the help of the pierced zones. We will discuss all those things. They are advanced concepts. At third phase of our training program, we will learn. But time being, remember, pierced zones are invalid zones. They are not required to keep on the charts, strictly speaking. They are not required to keep on the charts. That is the reason why we do not trade with the help of pierced zones. Pierced zone indicates all institutional pending orders are consumed. No more institutional pending orders in this particular zone. That is the reason why pierced zones are not tradable. Now after that, again, prices are moving up and down. And finally, once again, price went beyond this pierced zone. See, because there is no institutional pending orders, how easily the prices came below this. Easily it passed the pierced demand zone. And finally, price closed below this pierced demand zone. The moment price closed below this demand zone is completely invalid. Completely invalid. And the zone freshness is changed to violated. Violated means the zone is completely, all the pending orders are no more available in that zone, and also price closed below this zone. This zone is an invalid zone, and this zone cannot be used for trading. And first of all, this zone cannot be represented on the charts. That is the reason why once the price is completely violated the zone, we can remove this zone from the charts. Let me show you one more example in the violated zones. Previously what happened? The zone is pierced, right? Let us look into, just go below that candle. This is a before pierced. In this scenario, this is another scenario. See, price is completely violated now. Previously it was tested. Now what happened? Price is completely went below this demand zone and also closed below this demand zone. Now the zone freshness is changed to violated. The point you should understand, there is no rule that a zone should be first pierced and then it should be violated. There is no such rule. A zone can directly violate it without pierced. To avoid that confusion, if anybody gets this question in your mind, because I shown you earlier example. So to clarify your confusion, now I am explaining even this scenario. A fresh zone can be violated. A tested zone can be violated. A pierced zone also can be violated. All the three possibilities are there. A zone is a fresh without testing. It can be violated. It is possible. If the supply is so strong, it can consume all the institutional pending orders, even though it is a fresh zone. So it can be violated directly. A tested zone can be violated. This is the example. Here zone is tested. Second time it is violated completely. A pierced zone also can be violated. That is what you have seen in the previous example. Zone is pierced, went little up and again came back and completely violated. So a zone violation can be possible in all the three scenarios. I hope you got the clarity now. And violated zones are also not tradable because it is completely invalid. First of all, once a zone is violated, we are removing the zone from the charts. This itself indicates it is invalid and cannot be traded. So these are the 4 different types you can identify based on the zone freshness. Let us summarize what we discussed. A fresh zone is a valid zone. It is a tradable zone. A fresh zone is always a valid zone, so it is a tradable zone. A tested zone is also a valid zone, but it is not recommended for trading. The reason I already explained. Tested zones might have already consumed the existing institutional pending orders. So we don't want to take risk by taking second time again a trade inside this zone. That's why the recommendation is tested zone, even though it is a valid zone, but not recommended for the trading. And one more point I told you, you will be learning in the third phase of your advanced strategy sessions. A tested zone is a tradable only in special scenarios like high liquidity zones, HLQ zones. What is this HLQ? It is a short name for high liquidity. You will understand during the third phase of our training program. Next point, a pierced zone is an invalid zone. It is an invalid zone. Because it is invalid, it should not be used for trading. But we are keeping this zone on the charts because with the help of this zone, you want to find something else, something like bull traps, bear traps, that you will be seeing during your advanced strategies training program. And the fourth point is a violated zone is an invalid zone. Because it is invalid, we are removing completely from the charts. That's why violated zones are also cannot be used for trading purpose. So this is the summary of zone freshness. Let's look into zone achievement. It's a very important concept. A zone achievement can be defined in one of these two types. The first one is violated opposing zone. In short form, we can call VOZ. VOZ indicates violated opposing zone. And the second type is violated opposing pivot. In short form, we call it as a VOP. Violated opposing pivot. Let us look into these two scenarios with examples. Look into this chart. Currently, what is the freshness of this zone? Tested zone. Because the prices are tested. But for our discussion, let me clarify. For our discussion, the zone freshness need not be tested. It can be even a fresh zone. Even the freshness also can be a fresh zone. So that's why do not fix this concept I'm explaining should be tested. No such rule. This is just an example I'm giving. Maybe in the next example, I may take a zone with the type freshness as a fresh zone. Okay, so just don't focus on this type of the zone. In this example, it is tested, but our concept is something like this. Now prices are moving. And now what happened? During this process, a new supply zone is also created. We have a rally-based drop. So let us draw the supply zone. So it is a new supply zone. Obviously, what is the freshness of the zone? It is a fresh zone. But remember, for our discussion, there is no relation between freshness, whether it should be fresh or it should be tested. Anything is okay for our discussion. Just because you learned these concepts sometime before, I am just revising those concepts. It is a revision. But this revision should not create a confusion while learning this topic, zone achievement VOZ. We are discussing about violated opposing zone. Okay, this concept is not having any dependency on zone freshness. I hope I made it clear. Okay, now let us look into this topic. This newly created supply zone is having so much of supply, let us assume. Because it is having so much of supply and the prices are pushed down, in such a way all the pending orders in this demand zone is consumed. So now what happened? This zone, which is on demand zone. Now because of the push from this supply zone, observe my words carefully. Because the push happened from this supply zone, consumed all the pending orders and prices moved out of this demand zone. And who is the responsible for this entire push? This supply zone is responsible. Okay, the moment after this push, this obviously you already learned the zone freshness is changed to pierced. If a zone is pierced, immediately you should look into its opposite side zone. Opposite side is already a supply zone. If it is a demand zone, the opposite side is a supply zone. If it is a supply zone, opposite side is a demand zone. You have to understand this point clearly. Remember, always there is a fight between demand and supply zone will be taking place. So, this supply zone is responsible for piercing this demand zone. Because the supply zone pierced this demand zone, it gets a special achievement. Who gets the special achievement? Supply zone gets the special achievement because it pierced the demand zone. And that achievement is called violated opposing zone. This achievement is called violated opposing zone, in short name VOZ. This is the point you should understand. Let me show you one more example. In this example, what happened? Is it pierced or violated? Pierced means the candle should be closed inside the zone. Either inside or maybe even it can go up and close above this demand zone. That is also possible. But price should not be closed below the demand zone. That is called pierced. But now what happened? Price closed below the demand zone. That means this demand zone is not pierced. What is the status of the freshness? Now it is violated. Who is responsible for violating this demand zone? This newly created supply zone is responsible for violating this demand zone. That's why this supply zone gets an achievement called violated opposing zone. In short, VOZ. Previously also it is violated opposing zone. Now also it is violated opposing zone. That means a zone gets violated opposing zone achievement if it either pierced or violates its opposing zone. In both the scenarios, it can be pierced or it can be violated. In either scenarios, the supply zone gets violated opposing zone. Exactly the same way this concept is applicable to demand zones as well. Let me show you that example. So in this example, a new demand zone is created. Now it gets the zone freshness as fresh. Now a new supply zone is created. Supply zone also gets the zone freshness as fresh. Now prices entered into this demand zone, obviously the freshness will be changed to tested. Now what happened? This candle completely violated this supply zone. That's why supply zone freshness is changed to violated. In this example, it is violated. Or even it can be pierced in both the examples. Who is the responsible for this violation? It's opposite side demand zone. The supply zone, the opposite side, what is their demand zone? So this demand zone is responsible for violating this supply zone. I repeat again, this demand zone is responsible for violating this supply zone. This demand zone gets an achievement called violated opposing zone. Violated opposing zone. In short name we call VOZ. It gets an achievement. See, I have given 3 examples so far. 2 examples related to the demand zone and 1 example related to the supply zone. When demand zone is violated, supply zone gets the zone achievement. When supply zone is violated, demand zone gets the zone achievement. Which demand zone? It's immediate demand zone, the demand zone that is available before, just below the supply zone. That gets the achievement. The meaning is the demand in this zone is so powerful in such a way it is able to break its opposite side zone. Opposite side is always a supply zone for a demand. For a supply, opposite side is always a demand zone. You should not forget that point. So if a supply zone is violated, demand zone gets the achievement. If demand zone is violated, supply zone gets the achievement. But the condition is the immediately available demand zone or supply zone. That gets the achievement. Not the next demand zone or not the next supply zone. The immediately available. You should not forget this point. Hope you understand the reason. The reason is the institutional pending orders in this zone are so powerful. How much power they have? They have a power to violate all the pending orders in this supply zone. The push from this demand zone not only moved the prices up, but also consumed all the pending orders in the supply zone. So such kind of push happened from this demand zone in this example. Because the push is such a powerful, this zone is getting an achievement. That is violated opposing zone. This is the story behind the zone achievement type, violated opposing zone. Hope you understand with this point. Now let's look into the next type, violated opposing pivot. To understand that, you should get clarity about swing high and swing lows. I will give a brief explanation here because next topic you will be learning about trend calculations. There I will give you a detailed explanation about swing high and swing lows. But now I will give a brief explanation to make you understand this concept. Let us understand what are swing highs and swing lows. Please look into this chart. Prices are moving towards up direction. That means this is a bullish. Now all of a sudden the bullish is changed to bearish. We are not comparing candle by candle. We are comparing a bunch of candles versus another bunch of candles. The first bunch of candles indicates the bullishness. The next bunch of the candles indicates the bearishness in the market. Again, the next bunch of the candles indicates the bullishness in the markets. You hope you understand this point. So in this bunch of candles, from where this price is changing its direction, between these two candles, the price is changing its direction. And this is called a swing. See here, this is the first swing. From here to this here. Again the U-turn from here to here. See, this is the U shape. And this is an inverted U shape. The first one is inverted U shape. And this one is a U shape. That's why we are calling them as a swings. A swing indicates the movements in the price directions. That means the turning points in the price directions. Swings are nothing but the turning points in the price movements. Okay, here during the swing, what is the highest point? This is the highest point. This is called swing high. Swing high. And these turning points are also called as pivots. And this is swing low. In this turning point, look into the low point. In this turning point, you have to look into the low point. In this turning point, you have to look into the high point. Because this is the high point, we are calling swing high. Because now prices are falling down and again turning back. While falling down, we find the low point. That's why this is called swing low. These points, turning points, are also called as pivots. They are also called as pivots. And this pivot indicates a high point. This pivot indicates the low point. So we are calling these pivots because this pivot is at high point. We are calling it as a swing high. This pivot is at the low point. We are calling it as a swing low. So this is one point you should understand about swing highs and swing lows. We will have a detailed discussion on this in our next video. Now I am only giving you a brief explanation which is helpful for our discussion. First, is it clear what is a swing high and swing low? Swing highs and swing lows are the turning points during the swing. Similarly, this is the turning point during the swing. A swing always changes the market direction. See here, this is up direction. This swing point is changed the direction to down direction. Again, this swing point, it changed the down direction to up direction. Okay, these swing high and swing low are also called pivots. Now, which topic we are learning regarding zone achievement? Violated opposing pivot. Okay, now what we do, if you look into this chart, we are focusing on the swing point. Can you find any zone here? Yes, we can find a zone. What type of zone? Demand zone. Why it is a demand zone? We have a drop, base, rally. If leg out is a rally candle, it is a demand zone. So let us draw the zone. Is there any supply zone in this example? No, we don't have a supply zone. We can only find a pivot. We can't find a supply zone, but we can find a pivot. This is an important point you should observe. In this chart, we didn't find a supply zone. Instead, we are able to find a pivot. Now, what this demand zone is doing? It pushed the price. It is so strong in such a way. It pushed the price in such a way this pivot is broken. That means violated the pivot. Which pivot is violated? The opposing side pivot. That's why this demand zone gets an achievement. Violated opposing pivot. The opposite side. The opposite side. Generally what happens when prices reach into this, institutions might place some pending orders at these pivots. These pending orders will push the price down. Because it is having such a capability to push the price down, this zone is getting an achievement called violated opposing pivot. But here we have a problem. What is the problem? There is no guarantee that institutional pending orders always they keep here. Then who is the responsible for changing this direction? It can be even retail traders like us. How it is possible? Because institutions did not participate here. When price reached to this level, some of the traders, novice traders, or some of the traders, they use the technical analysis concepts, they use some indicators. So all those, whatever the tools they are using, probably those tools given a sell signal at this point. So immediately what we do? We keep on selling our stocks. Because of that, a selling pressure is added. Because of that selling pressure, prices move down. When prices move down, institutions created a demand zone. What is the guarantee that institutions created a demand zone? Because there is a base candle formation happened here. This base candle formation happens only when there is a fight between bulls and bears. That means two institutions are fighting each other. One is keep on buying and another one is keep on selling. That's why the base candles formed. And this base candle count is less than 6. We can confirm it is institutional participation is there after this move. What is the move after these base candles? The leg out. This leg out is created because of institutions participation, because the base candle count is less than 6. This leg out is not because of the retail investors participation. It is because institutional participation. Only institutions can only push if the demand and supply is strong in this area. How can we say demand and supply is strong in this area? Because price is moving in a narrow direction. And that too, the candles are less than 6. That confirmed us. Okay, now a demand zone is created and this demand zone pushed. How it pushed? Very easily it pushed. Why very easily it pushed? Because this pivot, the change in this direction is not because of the institutional participation. There are no institutional pending orders, much pending orders here. That's why easily it passed. So sometimes institutional participation also might be there, but zone is not created. Institutions might have placed pending orders. That's why easily price push it down. In such kind of situation, all those pending orders are violated because of very strong push from this demand zone. That possibility is also there. We have seen two possibilities. This turning point is because of retail investors participation. This turning point is also because of institutional participation. Both can be possible. When we have both these possibilities, how can we trust this zone? It got an achievement, good, well, but this achievement happened only for breaking this pivot which is participated by the retail investors or which is participated by the institutions. If we know, if there is an institutional participation, we can trust this zone is a excellent zone, able to break the institutional pending orders. If we know it is there is a retail participation, we can say easily it is broken. Where retail, there won't be any pending orders. Obviously, giving an achievement to this zone doesn't make any sense. That doesn't make any sense by giving an achievement. But do we know who are the actual participations here? No. If there is a supply zone, clearly we can say there is an institutional participation. But there is no supply zone, it is only a pivot. That's why pivot never tells you the change in the swing direction is because of institutions or because of retail investors. It can't indicate that. Because we are not having such kind of guarantee, violated opposing pivot cannot be trusted. He is getting an achievement, but you can't trust too much on that achievement. You can take a trade, but it is a high risk trade. You can't guarantee because the zone achievement is not clear. It is not VOZ, it is not violated opposing zone, it is violated opposing pivot. So you should be very careful when a zone achievement is violated opposing pivot. There is a third possibility is also there. A zone is created, it's not violated any opposing zone, it's not violated any opposing pivot. Then can we trust that zone? It is uncertainty. Because some action is not happened. Because not happened, you cannot say this zone is not good. Maybe it could be a good zone. But we don't have a confirmation. Because we don't have the confirmation, if a zone is not having any achievement, we can say it is an uncertain zone. There is no certain proofs available. What is certain proof? Zone achievement. Zone achievement is a proof. It confirms the zone is a powerful zone. But if there is no zone achievement, that means this particular zone is not violated the opposing supply zone or not violated the opposing swing high. In such kind of situation, we don't know how strong this zone is. We know there is a zone, but we don't know how strong the zone is. That's why such kind of zones not having any achievement are called uncertain zone. If there is an uncertainty, you can't take a trading decision. That's why we defined a rule. What is the rule? A zone is not having achievement, should not be traded because there is an uncertainty. We are not saying it is a bad zone. We are not saying that. We are saying there is an uncertainty. But such kind of uncertain zones also you can trade if they are high liquidity zones. What is high liquidity? That you will learn during your advanced concepts, the third phase of your training. A zone not having any zone achievement, but it got some other achievement, that is high liquidity achievement. That you will learn. It is a concept introduced by our NeoStock software. Hope you got the clarity and the difference between what is violated opposing zone and what is violated opposing pivot. So let's summarize what we learned about zone achievement. A zone having the achievement VOZ. What is VOZ? Violated opposing zone is a tradable zone. A zone having the achievement VOP is also a tradable zone, but the risk is at high. Why the risk is at high? Because the opposing side, whatever the pivot is broken, we have a question mark about that pivot. Is that pivot is created because of institutional participation or because of retail investors' participation? If it is an institutional participation, probably the risk of that particular zone will be reduced. But we don't know that. We can't identify who is participated there. That's why we are saying this zone is a tradable, but the risk is at high. And third point, a zone not having any achievement is an uncertain zone. Because we don't have any clues about that zone. Because if you are not having any clues, it's better to stay away from that zone. Look for some other zone, some other stocks. That's why we are not recommending for trading. So this is the summary of zone achievement. In the next video, we will discuss about trend, which is the topmost important concept in our training program. Without trends, identifying the trends, we cannot trade in any stock. So I will explain two methods for identifying the trends. One is based on swing highs and swing lows, and another one is based on zone violation. Already we learned zone violation in this video. I gave just brief introduction about swing high and swing lows, but I will explain in detail in our next video. So this is about today's session. I hope the information in this session is useful to you. If you are having any questions, please put them in the comment section. I will try to answer your queries. Let's meet again in our next video. Thank you.